New tonight, we've been reporting that California is in a home insurance crisis.
But where is your premium money actually going? Let's follow the money trail.
I don't know anyone who wants to pay more money for insurance, but providers say if they can't raise rates, everyone loses.
We're getting to the point where we're all being affected by fire insurance unprofitability.
In California, companies can't raise rates without state approval under Prop 103, which voters approved in 1988. A nonprofit group called Consumer Watchdog wrote the proposition.
We used to have a Wild West where insurance companies just charged whatever they want. Now they have to come in and prove up the numbers before they can raise rates.
Prop 103 also allows a group advocating for consumer interest to become a third party when an insurance company makes a rate hike request.
The premise of Prop 103 was that transparency will make rates fair. And we need someone looking over the insurance industry's shoulder.
Sounds like good protection from unfair price hikes. But insurance lobbyists say it costs us all money.
They get to charge legal fees for that.
Okay.
And over the course of Proposition 103, this particular group probably has made over $10 million off this initiative that they've written. The insurance companies have to pay their legal fees, and then the insurance companies turn around and spread those legal fees across the policyholders.
Balbert doesn't dispute this, but says it's worth it because
Consumer Watchdog has used Prop 103's public participation process to save homeowners and drivers $6.5 billion by challenging excessive insurance rates in the last 20 years. Consumer Watchdog in these proceedings has been paid $13.5 million over 22 years. And that pencils out to less than a quarter in costs for every $100 saved consumers.
Last week, Insurance Commissioner Ricardo Lara rejected State Farm's request to raise rates by 22%, going against the recommendation of staff experts, in part because State Farm just got a 20% rate hike approval in 2024. And Lara said the agency didn't show the rate hike was necessary. Currently, Californians still pay lower insurance rates than nearly any other state. And lobbyists say that if rates don't go up, it doesn't mean home and business owners really win.
It's fine if we're going to have price and profit controls. It's fine if we're going to have more parties duplicating the work the state's already done. But there's a cost to that, too. It's a slower system. It's harder to increase your rates. And ultimately, when companies can't get adequate rates, what do? They pull out of the highest risk areas where they cannot afford to do business.
State Farm stopped writing new insurance policies in California back in 2023, and several others have since followed suit.
We as the state of California have chosen this public policy. We have created this shortage.
Those claims are false. The insurance industry is making money in California, good money, in fact, in California. Home insurance companies in California over the past 2 decades were more profitable than the national average.
But in 2023, State Farm reported an underwriting loss of $9.7 billion, though Balber says loss reports can be deceiving.
The insurance industry doesn't make money on selling insurance. The insurance industry makes money on investing the premiums they take from us. So they make money on their investments. And if underwriting over an average of years comes out even, they're in really good shape.
Reliance on California's last resort FAIR plan went up 61% from September 2023 to 2024. After the Los Angeles area wildfires, the FAIR plan doesn't have the cash to cover the $4 billion in claims. So the state says it can ask for $1 billion from private insurers. That shakes out to a roughly $60 contribution via rate increase for all of us who have private insurance.
The insurance commissioner called for a meeting with State Farm officials on February 26 to answer more questions about its financial condition. So those proposed rate hikes could still happen.